Hello and welcome to Explain the Charts. Today, March 2nd, 2025, we are analyzing USDCHF, combining both news and technical analysis. We'll discuss recent events and dive into the charts to uncover potential trading opportunities. First, let's look at the current events based on recent Google searches. Recent news indicates that Trump is threatening tariffs on Mexico and Canada. We also see some volatility in major indices like the Nasdaq and S&P 500, potentially influenced by Nvidia's stock performance. Mortgage rates have hit a 2025 low due to economic jitters, and consumer confidence has experienced a significant decline. The Swiss National Bank is sticking to its Forex tool, unperturbed by Trump's policies, signaling a commitment to low inflation. Bank of America analysts maintain a bearish outlook on the Swiss franc, but without strong market conviction. Now, let's move to the chart data and see how these events correlate with price action. Looking at the daily chart, we can see a general downtrend over the past several months, punctuated by periods of consolidation and occasional rallies. Notice the significant drop in late July and early August of 2024, coinciding with some of the headlines about trade war uncertainty and global economic jitters. The USDCHF pair seems to be trying to find a bottom, but the overall sentiment appears bearish, which aligns with Bank of America's analysis. The trading range has been quite wide, making precise predictions challenging. Let's narrow our focus and examine the more recent price action on the 1-hour chart to get a clearer picture of the short-term trends. We see more choppiness here, reflecting the conflicting forces at play, including the S&P's commitment to low inflation and the uncertainty surrounding U.S. economic policy. The 1-hour chart shows some possible areas of support around 0.897 and resistance around 0.903. Breaching either of these levels could signal a short-term trend reversal. However, these moves are not very confident or strong, with resistance and support being tested rapidly and repeatedly. In mid-February, we see a sharper drop, possibly associated with concerns about declining consumer confidence in the U.S. Now, let's switch to the 15-minute chart for an even closer look at current price action. We can see price is generally trading around 0.892 to 0.895, indicating very low volatility right now. If it breaks resistance at 0.895, we may see a small jump, but I don't think that breakout would hold for long. If it breaks support at 0.892, we may see a drop, but I don't think that breakdown would hold for long either. Key price levels to watch include the support around 0.892 and resistance around 0.903, as we previously mentioned. A break above 0.903 could signal a short-term bullish move, targeting 0.905 and possibly 0.91, although sustained upward movement is not highly probable given the overall bearish sentiment. Conversely, a break below 0.892 could lead to further downside, potentially testing 0.890, but again, the likelihood of a major downward spiral seems limited. Given the current economic and political climate and the chart data, my unbiased prediction is for continued sideways consolidation, with USDCHF fluctuating within a range of 0.890 to 0.905. This consolidation is most likely 60% probability, unless there is a major shift in U.S. trade policy or a surprise move by the Swiss National Bank. If Trump announces a significant easing of tariffs or the S&P signals a major shift in its Forex policy, we could see a more decisive breakout. In short, look for sideways chop and be wary of major swings unless there is a shift from the current economic and political climate. That's it for today's analysis on Explain the Charts. See you in the next one.